Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. Okay, so let me just remind you once more, and this is a very timely reminder even now, given what's happened during the middle of this year, and as recently as October. I've said here repeatedly in this commentary for close to a year, the most significant feature of the market are the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, and I suppose also the congestion this year in January, February, late April, May, early June, and the high 22 weeks ago, plus the more recent highs 15, 13, 12, and 9 weeks ago. In recent months, this also added up as a test and halt, more or less, at the gold long moving average, currently at 15,300, so just bear that one in mind as well. In addition to these, for many months, I've also pointed out how the higher 15,840 level, along with the 15,665 level, was and is still also a key level. I know these levels are a bit away on the top side, but please continue to bear these levels in mind, however low we may venture. Okay, so 7 weeks ago I said, and I quote, closer to the current market, another feature to watch out for is the 50% Fibonacci line for 2025 at 15,325. Earlier stabilization over this 50% Fibonacci line had placed the gold long moving average under direct threat. However, we have since pulled back lower. It's worth now looking lower first at the September low at 15,055. As if we exceed that on the downside, and we still might, well, this month of October might be set up to become a possible monthly key reversal, for all the implications that may have. Then after that, also keep an eye on the November 2020 low at 14,935. End of quote. Well, there's a lot to unpack there. First off, we did not manage to make a monthly key reversal down in October, but the threat was still there, and prices duly obliged by heading lower in November, holding for a bit just ahead of the 14,935 level. Then the market punched down through this level, and as you can see, there was a little underneath it until the congestion in late 2019 to early 2020 around 14,395. And the drop and subsequent swift pull back up in late November seems to be a result of that support. Okay, so what we have achieved? Well, we have exited out of a late May to November rectangle pattern between 14,935 to 15,665, a pattern I mentioned 13 weeks ago and ever since. The break below the rectangle gave a primary target in the 14,540 zone, which was reached 4 weeks ago, and plus a secondary hard to reach target X1 down at 14,205, significantly below the congestion around 14,395. Yesterday we dropped down as far as 14,235, within $30 of the target zone, enough that I can call it achieved, though I will still leave the target X1 on the daily chart for now. We can now see that the immediate overhead congestion is between approximately 14,735 to 14,980, as well as 14,395, while support is now down at 14,040 and the low for 2025 at 13,865. This counters some earlier ideas of the November-based V-bottom forming a possible bullish halfway hesitation. And also watch out for closes below 14,150, as that would then make them the lowest closes since September 2020. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the followery broken, but even now still refusing to die. Old dark blue May to August 2023 bullish shift pitch hook that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle times. They're currently at 30.98 and 29.33 respectively. And in October and in early November, as well as today, after a significant breach on the upside last week, the dark blue upper time has helped cap the market's attempt higher today as well. This thoroughly broken dark blue pitchfork is still will not die. Even when I thought 34 weeks ago it finally expired, it still came back like a high functioning zombie, influencing and impacting the market. This bullish shift pitchfork has within just about the bright red mid-July to date bull channel, currently 30.09 to 32.21. This bull channel has captured most of the action, though it has been finessed to where it sits now. A further item to watch for is the overhead, very slowly declining purple neckline extension, currently at 31.07 of the September to December 2022 head and shoulders top. That's just above the dark blue upper time. This caused the cap on the market in early November, and despite being breached last week and yesterday, is worthy of attention as it has been key in capping prices. There was a separate action in mid-November which I spoke about 3 weeks ago when I said, and I quote, "The action last week and the follow-on so far this week has given an indication of a possible horn bottom pattern. However, unlike the horn bottom seen in LME aluminium, the one here is less developed, and I'm not comfortable to lay out any topside targets or even potentials for it, though I would suggest keeping a close eye upon it. I know I will be." End of quote. Well, since then the horn bottom has developed with a primary target at 89, which was reached 2 weeks ago, and a secondary hard to reach target X3 up at 31.17, just over the purple neckline extension, which was reached last week. Thus we're back below some substantial resistances and congestions that had been breached, and a new higher bull channel that seems to be the current core pattern, though I would still not rule out the dark blue bullish shift pitchfork, especially the upper time. LME 3-month tin. Okay, so the big picture here continues to be focused on the major pattern of the dark blue late November 24 to mid-April 25 bullish shift pitchfork. Late last week we saw a test and a breach of the dark blue upper time, which is currently at 41.765. But as we have only had one single close above it, and then only just, I think we can say that this breach was repaired, if not still a little raw. In the process, we made a high not seen since April 2022. This all ties in with other moves, as November's high exceeds October's, and now the one seen in April, the high for 2025. We have also breached, though prices have not yet stabilized properly, over the purple upper trend line, which is currently at 44.90, and that's of the July to December ascending expanding wedge pattern, which is currently at 35.545 to 44.90. In this one, I'm not ready just yet to consider potential targets on the top side. We also have a newer October to November based bright green ascending wedge pattern, which is currently at 37.510 to 41.50. Now this one has been breached, and also I dare say broken, with the market seemingly using the upper trend line, especially today, as a base for some attempts higher. Thus it is appropriate to lay out some potential targets for this smaller pattern, of a primary target in the 41.605 area and a secondary harder to reach target X up in the 43.340 area. Now, as you can see from the daily chart, the primary target was reached late last week, though the secondary target X is still available. It all now depends on whether the market has truly formed a base on the bright green upper trend line or not. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.